Hello and welcome to a new episode of Merrill's Monday Morning Market Madness. Today is July 3rd, 2023. And today I'm coming at you with a recap of our housing market numbers for the month of June and kind of looking at how those numbers have compared to the previous months and also how they compare to June of last year to give you an idea of the trajectory and current trends that we're seeing in our market. I've got the numbers written behind me on the board today just because I think that maybe being able to see it visual is always really helpful. So I'm going to try to back up and show you, and I might need to kind of adjust my screen at some point. But starting out with our month supply of inventory as always. So right now, active in our MLS, 11,381 homes. Pending, there are 8,093 current pending contracts. And over the past 30 days, we've had 6,656 homes close. So that gives us a month supply inventory number of 1.71. Basically, if we just take the active listings divided by the number of listings that have sold over the past 30 days, if no new homes were to come on the market, how long would it take before everything is gone? Currently at 1.7 months, which is right around where we've been. The month supply of inventory has kind of leveled out. We've been sitting around 1.6, 1.7, sometimes depending on the day of the week and how many listings sold over the past 30 days. We've been as low as 1.55, but it's mostly been floating in that between 1.5 and 2 month supplies for a good 3, maybe 4 months now. And so, to give you an idea, anything below, 4 months or below is definitely considered a seller's market. So despite the high interest rates, there's just very few homes available for sale compared to the number of buyers who want to buy them. And so lack of supply, we don't necessarily have a huge demand. Demand is maybe even a little lower than normal. Is lower than normal. Fewer homes are selling this year than what we've seen in years past. The total transaction volume is lower. There's fewer buyers willing to transact, fewer sellers. But the problem is there's also fewer sellers willing to transact, right? There are tons of people who would love to move, but their need to move is not strong enough to outweigh the complication of, if I move, I'm going to lose my 3% interest rate and trade it for a 6.5% interest rate. So we have this kind of problem where many sellers are not wanting to, yeah, sure, I would love to get out of an HOA, or I'd love a little more space, or I'd love a pool, or I'd love some land, or whatever. A lot of those people are saying, yeah, I would love that, but I just can't justify going out and buying that new, more expensive home and having to pay for that 6.5% mortgage. Even if I could qualify, I don't want to, or in many cases, they don't even qualify. So that's what's keeping inventory super, super low. And that's what's causing home prices to rise. So let's take a look at the June numbers. So in June, 7,384 closings. The average price of all of those closings was $581,000. The average days on market was 62 days, and the sales to list price ratio, meaning is 98%. So on average, homes are selling for 2% below the asking price. But what the most interesting number, if I go back and I look at May, April, and March, you'll see a relatively similar number of units closing each month: 8,112, 6,700, 7,603. So the 7,400 is, relatively kind of in the range of what we've been selling each month. But look at the average prices. In March, it was 541,000. In April, it went up to 553,000. In May, it went up to 566,000. And then in June, it went up from 5 to 581. So between March and June, the average price has increased by $40,000. Despite the high interest rates, we are still seeing home values rising. Again, very, very low supply. There's not enough homes available for buyers. So if there's a home you really love, sometimes it's competitive, and sometimes we're seeing multiple offers. And even if it's not competitive, sellers, the homes are, selling in a reasonable amount of time. In fact, if you look at the days on market, same thing. It went from 76 to 70 to 68, now down to 62. So homes, not only are the prices rising, but the days on market, homes are now selling 2 weeks faster than they were selling back in March. Now, I will say this. the spring buying season is typically the hottest market that we have in the Phoenix area. So March to June, that's probably the hottest that the market will be for the whole year in a normal year. Of course, COVID, and the years following COVID, we had a very abnormal market activity. But if we look back at 2019, 2018, 2017, 2016, we typically saw the vast majority of our price appreciation happen in the spring, and we also saw a larger amount of units happen in the spring as well. So I do think that it's likely, can't predict the future, of course, but I do think that it's likely that we'll start to see a fewer transactions happening. We probably won't continue to see 7,000 a month. Might dip down into the low 6,000s in terms of how many homes are going to sell every single month. And I think that the prices might stabilize. The $40,000 increase that we've seen in average prices over the past 4 months, I doubt that continues as demand will fall and the market will stabilize probably for the rest of the year. Obviously, the huge unknown on that is going to be interest rates. If interest rates go up more, that could have a slightly negative impact on the market. But again, inventory is still so low, I don't see a significant drop in house values happening. If interest rates were to somehow come down, I don't think that's likely based on all the news that I'm hearing. Is the Fed is talking about raising rates at another quarter, at least 2 more times this year. So I doubt mortgage rates fall this year. But if they did, we might see an absolute frenzy. I mean, think about that. We're seeing prices rise despite 6.5% rates. If rates were to drop into the low 5s or high 4s even, we're going to see significant increase in the amount of activity and significant increases in home values, in my opinion. A couple more quick numbers to share. So if we look at, let me move this down a little bit. If we look at June of last year, okay, so we had, keep in mind, June, one thing that's interesting about June of last year is that interest rates had risen by that time. I don't think they were quite as high as they are today, but it's not like they were still sitting in the 3s. June of last year, interest rates were at least in the high 5s, I believe. So if we look at June of last year, we saw 8,113 units sell. So again, a little bit fewer in terms of, this year, a little bit fewer in the number of transactions. And the average price was actually $592,000. So the average price is actually still $11,000 lower than it was at our peak in June of last year. But I predict we will probably catch up to that in July. Just because I mentioned that the peak buying season is sort of over. We'll keep in mind the homes that close in July actually went under contract in June. Market's still pretty hot in June for the most part, but so we might see a slight bit more increase, and so year over year we will probably see basically home values are stable. A lot of times, when you see just a news article or something that talks about how, home values are falling, because that is what happened. But, we hit our peak in June or July of 2022, around $592,000 highest average sales price. And then it did fall all the way to, I think it went even a little lower than 540. It went somewhere around 530. So the average price did drop a good $60,000, $70,000 last year. But now we've gained almost all of that back. So when we look at a year over year, home values are pretty close to flat, technically down roughly 2% right now. So we'll keep an eye on that. The last number that I just wanted to share that I am finding really interesting, if I look at all the rentals, that went in June of last year, the average price of those rentals was $2,360. The average price of the rentals that went in June of this year, $2,363. So rental prices are completely flat right now. They're not really falling right now, but they're not rising, which is abnormal. If we look at over the last several years, rental prices have been rising pretty significantly. And I believe the reason why rental prices have really leveled out is because there are many homeowners who say, instead of selling my home, I'm going to rent it because I've got this 3% mortgage on it and the cash flow that I could get on it is so good. So we have a surplus of rentals. And I have been seeing, several articles and economic analysts and predictions saying that they believe we are going to see a slight dip in average rental prices in the Phoenix market. That could have an impact on the sale market as well, because if people feel that it's cheaper to rent than it is to buy, which is true in many cases right now, they may choose to continue to rent. I think that there's a lot of factors besides just your monthly payment. And ultimately, I still believe the American dream of wanting to own a home, even if that is a little bit more expensive, is something that most people are going to want. So I don't think it's catastrophic for our market, but possibly good news if you're a renter and plan on continuing to rent. Well, hopefully you've got a good situation where rent prices are not going to be, getting increased too terribly much over the next coming months. And we'll continue to keep an eye on that as well. Anyway, I hope you found this information helpful. If you have any questions, please let me know. Hope you all have a wonderful 4th of July.